Hello and welcome to Armanino's series of webinars on the Paycheck Protection Program and everything you need to know about forgiveness. Our job right now is to try to get you as educated as you can. There's an awful lot of information that's out there on the web, some of it accurate, some of it not. We want to make sure you have the facts so that you qualify for all the loan forgiveness that you should get. My name is John Schweisberger. I'm the partner responsible for Armanino's business outsourcing services practice, which includes all of our SBA programs as well. Just a quick word about Armanino. We're one of the 25 largest CPA and consulting firms in the country, rapidly growing with over 1,500 employees in 22 different states. We're based in California, the largest accounting firm in the state of California. Let's jump into an overview of the loan forgiveness program. I think most people know these facts by now, but just to make sure we're all level set, the forgiveness amount is the important number that we're dealing with in the PPP program. There's a lot of things in what the SBA puts out, what various articles have put out that talk about both the forgiveness amount and the loan proceeds. There are going to be very, very important distinctions between those two, and we'll walk through that. But basically, that maximum forgivable amount covers qualifying payroll costs and 3 categories of operating expenses spent during the 8-week period that begins the day you get the funds in your bank account. There's a couple of reductions that may factor into your forgiveness amount. We'll talk about each of those. And what you should know as well is that anything that does not get forgiven, it's okay. It just means it turns into a loan that's repaid over 2 years at a 1% interest rate, and the payments are deferred for the first 6 months from the date that you got the money. Your main job right now is a couple of things. One, make sure that your spending is provable. Everything that you've spent, you need to be able to document it. And most importantly, make sure that you have a strategy for how you're going to use those funds that you get. And maximizing forgiveness may be one of those strategies. It may not be. It depends on your situation. We want you to make sure that you've thought this through, not only for the 8 weeks, but for the quarter or 2 quarters beyond. So let's jump into how you can use PPP funds in order to drive forgiveness. The first big part is payroll costs. What's included in those are these 4 things that you see here. Salary, wage, commission, basically what we'll call gross cash compensation for all of your employees during the 8-week period beginning the date that you got your funds. Now, it's important to understand that this amount of compensation is capped at $100,000 annualized. And that's a very important word, that annualized. In the course of, and we'll come back to that, in the course of these 8 weeks, that works out to what you see here, $15,384.62 if you want to be very precise. So anybody that earned more during that 8-week period, you're only going to be able to count the $15,385 as credit towards forgiveness. On top of those compensation dollars, you also add the dollars that you spend on group health care benefits, insurance premiums, not including workers' compensation, but health care, retirement benefit payments that you may make in the normal course of business. Don't try to look back to 2019. And your portion as the employer of the state or local taxes that may be assessed on the compensation of your employees. When we get into the other costs that are involved, costs related to group health care benefits during the sick and family leave that are not related to the Families First Act also get included. Payments of any interest on any covered mortgage, which includes both real property and tangible personal property. So, for example, if you took out a loan to buy production machinery for your manufacturing facility, the interest portion of that loan payment is creditable against these PPP funds. Not the principal part, but the interest is. Rent under a lease agreement, which could cover your office space. It may cover copiers and telephone equipment. Those are often leased operating items. The rent cost of that is included in allowable use of PPP funds, along with your utility payments, which are the normal water, gas, electric, internet, telephone, those kinds of things are included in there, as well as transportation costs that you may pay, which could include gas for company cars and things like that. There's also one other interesting thing in here, and this is part of where the distinctions between the allowable use of funds and the forgivable amount of funds comes into play, and that's on pre-existing debt obligations. Interest on pre-existing debt is clearly allowed under the Act. It's as a use of funds, but in the section on forgiveness, which is section 1106 of the CARES Act, it does not mention these pre-existing debt obligations that are clearly spelled out as allowable uses. That may very well change as we get further guidance. It could just be an oversight. It could be intentional. We don't know until we get additional guidance from the SBA and Treasury. Okay, so that's what's in the spend. Let's turn to the math of how you figure out the forgiveness. And this is where it gets really, really complicated. So I'm going to try to go slowly through this and hope that you can track with me that these aspects of things are very technical, very easy to make mistakes with. So let's start with the beginning. Most people are aware of the fact that 75% or more of the loan proceeds are intended to be used for payroll costs. Conversely, therefore, up to 25% may be used for non-payroll costs. Okay, but let's understand the denominator here. What this says right here is 75% or more of the loan proceeds to be used for payroll costs. Loan proceeds may differ from forgiveness amount. Okay, let me give you an example. We get $1 million loan, therefore $750,000 of that loan needs to be used for payroll costs or more. But what if in the course of the 8 weeks we were only able to spend $800,000 of that million, and $600,000 of that we spent on payroll costs? Under the forgiveness math, 75% of the forgiveness amount, which is the $800,000, because that's what you spent, needs to be spent on payroll. 600 over 800, 75%. You're okay. So all of that 800 goes in as forgivable at that point. That's a distinction between what about that other 200,000 that we didn't spend? That's what rolls over into a loan. That still needs to be used 3/4 for payroll. So of that 200,000 that rolled over into a 2-year note, 150 or more of that needs to be spent on payroll. So I hope that helps clear up some rather vague language and apparently conflicting language in some of the guidance that's been received since the CARES Act came out. But that's the current interpretation of things as of the date that we're recording this in early May. We do expect that there's going to be a lot more guidance that should be coming out virtually any day now. We'll see exactly how that plays out between the forgiveness amount and the loan proceeds, but the way that I described it is what we understand today. The other thing that we understand today is that that 75% line is a bright line as currently written in all of the guidance and in the Act. Meaning, if you're at 74.2%, the way it's written right now, there's no forgiveness. Now that may change. In fact, we expect it will change. But I want you to understand that at the moment, and today is May 12th that we're recording this, that is a bright line. And subject to future guidance, you're going to need to be able to take that into consideration. It may change and become proratable below 75%, but that's not where it is right now. So let's talk about reduction factors against that forgiveness amount, the amount that you spent in the 8 weeks. There are two primary reduction factors, and they are additive to each other. One is your reduction in the number of FTEs. Now, we haven't defined specifically whether FTEs is 30 hours a week or 40 hours a week for calculation purposes. That's more additional guidance. But the point at the moment is we need to compare our number of FTEs during the 8-week usage period with one of two base periods from 2019 or earlier in 2020, whichever is more favorable to you. If there is a reduction between the 8-week period compared to either of those base periods, that percentage reduction gets applied to the forgiveness amount and reduces accordingly. The second reduction factor is on any employee's salary and wages that were reduced by more than 25% during the 8-week period as compared to the first quarter of 2020. Now, there's a couple of very important things here, and they're underlined here. Any employee who's had pay at an annualized rate in 2019 during any pay period that tops $100,000, those employees come out of this calculation. Okay, so for example, we have a $52,000 a year person who's paid $1,000 a week. But in June, for example, we gave them a $10,000 bonus. Their W-2 will say $62,000. However, when we're looking at any pay period in 2019 and annualizing it, if in that June pay period they got paid $2,000 for 2 weeks of work and $10,000 more for their bonus, they got $12,000 in that one pay period. Annualize, you're over $100,000. That employee comes out of the equation. So this makes the math part of the forgiveness way more complicated than what it was on the loan amount on the front end when you were looking at large average dollars on a firm-wide basis. Here you have to look at any employee, any pay period in 2019 to decide, are they in or are they out of this calculation? So that's the first part that makes this complicated. Here's the second part. Notice that it's the compensation during the 8-week period as compared to Q1 of 2020. Well, Q1 of 2020 was 13 weeks. So you're comparing, as written right now, 8 weeks of compensation versus 13 weeks of compensation and saying if there is a reduction of more than 25%, which almost by definition there will be, then you take those dollar reduction values and add those up, and that total also becomes a subtraction from your forgiveness amount. So I know it's really complicated to try to go through that, but it's a very, very important point of distinction so that you understand that the likelihood of your total spend being forgiven is in high probability going to be reduced below 100%. Okay, there is some ability to offset those two reduction factors, and that is if you have rehired employees by June 30th or restored their salaries by June 30th of 2020, then those two reduction factors I just talked about, they go away. Okay, so there's one other thing that's very, very complicated and very confusing in the way that the CARES Act is written, and that is the statement that the 8 weeks of spending are measured as cost incurred and payments made. That's the actual term that's written into the language of the legislation. So that, when you start to parse the words, becomes very complicated. Is it a cost that has to be incurred during the 8 weeks and the payment made during the 8 weeks? Is it a combination of the costs that are incurred during the 8 weeks and payments that were made during 8 weeks, meaning I may have incurred the cost but not paid it, or paid it but incurred it earlier? It's very unclear at the moment. There's a lot of conversation out on the internet as to exactly what this needs to be and should be. Here's what we're taking as our guidance at the moment, is we're just going cash basis. So basically payments made to try to figure out accruals at the beginning or tail end of the 8-week period can be very, very complicated and also, frankly, very difficult to prove if, in fact, somebody comes back to try to audit this later. So for simple purposes right now, we're advocating go with a cash basis until such time as the guidance changes. And then the last important consideration is the whole issue that has come up around need. If you'll recall, on the application for the loan, the first certification that you needed to make as a borrower was the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Necessity is undefined. What did come back in late April was all of this attention paid to large corporations, some of them publicly traded, who took out loans and became very much in the spotlight of the Treasury Department. And as a result, they started to say anybody over $2 million in loans are going to be audited for both necessity, did you need this and had no other avenue available to you, and did you spend it according to the terms of the program? If you're not certain about that, and there is no definition around how much liquidity was enough, not enough, too much, not too much, nothing's out there that really says that. So you kind of have to look internally at how comfortable are we with being able to demonstrate that need. If you and your management team feel like maybe we're better off not running that risk, you have until this Thursday, May 14th, to return the money to the lender with no penalty. You will be deemed as having demonstrated need and qualified accordingly. If you choose not to return the loan, that's okay. Just know that you're going to need to make sure you can document why you had the need, what made necessity to support ongoing operations a true statement. So best practices that we are advocating everyone take is to build a forecast, not only for just these 8 weeks, but into the quarters beyond and as much as 2 years, to determine exactly how you want to spend this money. Does it make sense if you're going to be shut down or very severely impacted well into the summer and the latter stages of Q3 to try to hire everybody back, spend all that money in 8 weeks, and then be right back to a situation where you have to let everybody go again? What you have to look at is the viability of maintaining your business for the longest stretch possible and what the best way of making that happen is. That's what this 2-year forecast will enable you to do. Beyond that, for your spending of this money, make sure that you have segregated the funds into a separate account so that you can very clearly demonstrate with a clean audit trail exactly what money came in and what money went out, so that you can easily support this should anybody, lender or SBA, come looking at how exactly you spent the money. You intermingle the money, it's going to be very difficult to prove that I used this dollar for that purpose. So segregate the funds, be very transparent about it. Keep in mind also that not all the payroll expense factors into the forgiveness calculation, as well as debt principal payments, right? So we need to be very clear that you're clean with your audit trail on this and exactly how you've used the money for which of these forgivable purposes. Okay, it's also important that you keep track of this so that you know where you're at all times, and make sure also that you do not go down the path of changing your payroll cycle, because that just is going to raise questions both among the government as well as your employees. Okay, so finally, to wrap it up, simple summary: plan ahead. Don't get yourself into a situation where you're surprised 7 weeks into this and you start to run some forgiveness math and go, oh, I thought I was going to get 100%. I'm nowhere close. Manage your own expectations by planning ahead on how you're going to use the funds, how you're going to handle your staff, and how you're going to manage your compliance with all of your essential business operating costs. Make sure that you're looking beyond the 8 weeks for your own path to liquidity. And please understand, this is a very technical and complicated process, much more complicated than what the front end was when you applied for the loan. There's a lot of liability attached to it. We don't want you to get into trouble by no fault of your own because you weren't thinking ahead on some of these things. So I'm hoping that these facts that we've gone through help to educate you a little bit. When we come back here in a couple of days with our next podcast, we will take you through a whole bunch of frequently asked questions that have been coming our way that get into some of the details around the program beyond this high-level overview. Also want you to know that we can help you with forgiveness when the time comes. During the period between now and the end of your 8 weeks, we can help you model what that covered period looks like. That's going to be very dependent on your specific, unique situation. When it does come to the end of the 8 weeks and your lender has given you a forgiveness application to complete, we're happy to help you prepare that. We can submit it for you. You can see the pricing here on the different loan values and what the fixed price is on those. If you want to learn more about that, visit the website that you see here at the bottom of the screen, which is learn.armaninolllp.com/SBA. And for all of your COVID-19 questions that you may have, we have pushing 200 documents that we have prepared that cover each of these 5 areas, from cash controls, crisis management, to internal and external communication strategies. Certainly a lot of this stuff around government aid beyond both the PPP program into EIDL and other microloans that may be available, HR and remote workforce challenges. And finally, depending on your industry, we have a number of things that are specific to certain industries that may help you get as much information as you want. That can be visited on our main website, armaninolllp.com. There's a link right there at the top to the COVID-19 Resource Center, and there's all of this information available to you. I encourage you to please educate yourselves, be an educated, knowledgeable consumer of this very challenging set of issues that are running crazy throughout our society right now. We wish you the very best on that. Please tune in for our next webcast that will be released on Friday. And Jen McCabe, a partner of mine in our business outsourcing services practice, and I will go through a couple of dozen questions about very specific uses of funds and forgiveness applications. So I encourage you to stay with us. Thank you very much for joining. That's it for now.